Good morning, Bookmap community. Welcome to the live stream. My name is Charles. I come from a community called Piratetraders, where we are focused on the ES, the NQ, and how they move through the two-way auction process. I'm so happy to have you with us this morning, and there is blood in the water. There is blood in the streets. There has been a massacre of the futures over the weekend. The market is significantly lower this morning than it was last Friday. And so that is going to be our main focus for today. What do we do with all the blood? How do we handle it? And the answer is simple. I'm going to handle it like I handle everything every day, always the same, which is I'm going to see it as an auction process. What does that mean? It means there are many different mechanisms that affect the moves that the prices make. Most people are speculating these moves in the stock market have to do with the yen, okay, and have to do with the Japanese currency and what is happening with that. But the one fundamental truth is that emotion will always play into the moves that the market makes, particularly on days like this. For an auction process trader such as myself, this is an amazing morning. This is a morning where I wake up excited. I wake up ready to take on the day because I know two things are going to happen today. One, the market is going to get volatility. Whether it's up, down, or sideways, the market is going to make large moves with a lot of number of points, and that means there is always opportunities for me to make money. Okay? At $50 a point, I can make a lot of money in a market that has 100-point ranges. Okay? There is just a lot of money to be made on a day like this. So that's got me excited. I'm so excited, and I just can't hide it. Now, what's the other thing that gets me excited? Well, understanding that it's going to be a very emotional morning. Not emotional for day traders like you and me. It's going to be emotional for money managers. It's going to be emotional for people who are in charge of hundreds of millions of dollars of capital, who are all going to wake up this morning and see that their portfolios are doing very badly. And whether they should or not, they're going to feel a desire to take action. They're going to feel a desire to sell things and buy things and move money around to try to make up for the losses that they're going to see that they have this morning. That is emotion. And emotion we can read. An emotion, we can understand what's happening. We can recognize who the participants are and what they're doing, and we can take advantage of it. So knowing that this morning I have both of those things in my favor. I will have an emotional market that I can read because it's emotion. It's not computers beep-boop-beep-booping and making decisions. It will be humans making decisions here today. And knowing that it's going to be large ranges sets me up for a beautiful day in the market. And I'm just honestly very excited. So first things first, we will have a gap down this morning. Okay. Obviously, very large gap to the downside. Very big move in the overnight market. Large gaps often don't fill on the first day. Okay. Now, we will almost always, like 99% of the time, we will test either the overnight high or the overnight low at some point in the regular trading hours. So if I know that they probably won't fill the gap, they probably won't get to Friday's low because that is a lesser probability, and that there is a very high probability that they will get to one of those two lows, the overnight high or the overnight low, what does that tell me? It tells me that the market will open, it will try to fill the gap, and whenever it stops, whenever it pushes as much as it can to the upside, the target will become testing that overnight low. And that might be 50 points below us at that moment. Okay? So that is the first thing on my mind. Can the market fill the gap? Can it get to yesterday's low around 53.40? Or will we get a gap and go where the market tries to fill the gap and cannot fill it? If we're getting that gap and go, we can assume the momentum will bring us back to that overnight low. Okay, around 51.17. So that is the first focus on my mind. Now, the other tricky thing here today is These things don't have to happen in a straight line. It's not like the market has to open, immediately push up, and then immediately push down. We can spend a lot of time going sideways inside this extremely large overnight range. We could even go sideways all day. We may not test that overnight low until 2 minutes before the close, for all we know, in a spike down later on in the day. So I'm not going to fall in love with trades purely because the target is getting to the overnight low. I'm going to be taking profits within the range. Okay? There's a very real chance we might spend all day kind of bouncing around between this area here around the 52 230s and this area down here around 51, we'll call it 5130s. All right? So within that range, we may just bounce around all day. Okay? But as a bigger concept, understanding what the market is doing, if it cannot fill the gap, which I don't think it will, the highest probability is that at some point in the day we're going to test that overnight low. Okay? But chop sideways in between would not be unusual at all. When a market is emotional like this, and everybody's panicking, and everybody's making decisions, oh my God, I got to do this, I got to do that, things can change instantly. The market can be looking like it's getting momentum up or looking like it's getting momentum down, and then out of nowhere it flips and it completely retraces that momentum. So that tells me if I'm entering trades today, once I'm in the green, once that trade, whether it's a long and I'm way above my entry or it's a short and I'm way below my entry, once I'm in the green and I have a decent profit, I always want to move my stop above my entry if it's a long or below my entry if it's a short. Okay? I want to guarantee myself that if the market suddenly flips and reverses and starts moving the other direction, I can't lose money. So today is a day where I would rather get in a trade, move my stop, get stopped out, have to get in again, move my stop, get stopped out, get in again, move my stop, get stopped out like 4 or 5 times, then the market makes the big move in my direction, rather than a day where I just get in the trade and just sit back and wait and go, oh, please market work for me. Okay? Because this is going to be an emotional day where things can change instantly. So I know how to look for opportunities. I'm looking for resistance to sell and support to buy. I'm looking for momentum to the downside to continue. And I'm looking to take profits quickly. I am not falling in love with trades today. Let's have some fun. Let's make some money. Generally, we always start with a top-down approach, but really we probably don't need to do that this week. Because, as I said, really the ruling reason behind the market this morning is going to be reacting to this move over the weekend. Okay? It's just going to be either people buy the dip, they see this as a discount, and they get excited, and they take whatever cash they have, and they put it into the market, in which case we'll try to fill that gap to Friday's low, or they don't, and they try to run to cash, and they try to get out of trades so that they can have more cash to hold on to because they think the dip is going to keep on dipping. So if we look at the market on a monthly chart, this month has now created a new low on the monthly. That means the momentum up is over. We have completely engulfed the previous month's range or 2 months ago's range. Okay. So that tells us that there's a lot of momentum to the downside. We've also re-entered on the monthly time frame a previous balance area, which increases the odds we're heading towards that balance area low on the monthly time frame. Okay. Now let's zoom in and take a look at the weekly time frame. Here we can see what that balance area low is on the monthly time frame, and that's going to be right in here around 5,000. Okay, so at this point, that is the highest probability. Again, on a monthly time frame, I'm not saying today, but if the momentum continues to the downside today and it continues to the downside the rest of the week, we will be heading to 5,000. Okay, that is that balance area low on the monthly. On the weekly time frame, we see that the momentum continues. We had a trend down in the weekly last week, and we were asking ourselves the question, are we going to bounce and turn around and head back up, or is that momentum going to continue? Well, already Monday morning, before the opening bell even rings, we know that momentum is going to continue. So that is bearish to see on the weekly time frame. The only thing that could make us no longer bearish on the weekly time frame is getting back up into Friday's range, getting back up into last week's range. Okay. Otherwise, we should assume last week's range will be resistance and the market will continue lower. All right. And then let's zoom in and take a look at the daily. Whoa. Ow. Right. So the daily is just a straight up bloodbath, right? This is a lot of momentum to the downside. Okay. So this can't keep going down forever. At some point, the market has to cool off. It has to have some time to either try and reverse and head back up or go sideways. So on the daily time frame, I'm saying to myself, even though the momentum is down and the highest probability is continuation lower, we don't have to go any lower today, right? That overnight low might be it. That might be as low as we're going to go. And so we may just go sideways inside this range. We may just pull back up towards Friday's low and not be able to make it. Okay. The last thing I will mention is the moving averages. I like to watch the 20 and 50 moving averages, simple moving averages on the daily time frame. When they cross each other, that is a very bearish signal. Now, here's an example where they crossed and we didn't get much follow through. But if I were to zoom backwards, I could show you a lot of examples where we do. Okay? There are a lot of times where when the 20 moving when the 20 moving average crosses the 50 to the downside, the market in the days that follow make a massive move to the downside. When the 20 crosses the 50, massive move to the downside. 20 crosses the 50, massive move to the downside. Okay? 20 crosses the 50, massive move to the downside. So it doesn't happen every time. There's an example of a time where it didn't happen. There's an example of a time it didn't happen, and another example where it didn't happen. Okay? So it's not that every single time the 20 crosses the 50, there's a massive bloodbath in the market, but it is a very important signal to keep an eye on. And we are about to do that. I would say in the next, unless the market were to completely retrace from here and have a V-shaped recovery, which I do not think is likely, I would say we're probably going to cross the 20 over the 50 this week. Okay? And that's very bearish to carry forward in the weeks ahead, that we may have a lot more selling ahead of us. Okay? A lot of that we will be able to figure out by the close today. How does the market react to this blood? Do people continue the panic? Do we get to that overnight low? Do we get new selling below that overnight low? Or are we able to retrace up into yesterday's range, up into Friday's range? Getting back into Friday's range is slightly bullish to see. Not really bullish, but slightly bullish to see. Anything else is bearish. Going sideways inside the overnight range, bearish. Getting below the overnight low and getting new selling, very bearish. It's as simple as that. And then lastly, for any of you that are market profile traders in the room, I will make note that I am in 4-tick increments. I have been for the last few trading days. I will remain in 4-tick increments today. What does that mean, 4-tick increments? It means each letter that you see on the TPO represents an entire point in price. It gives me more clarity and understanding when I see it as a more condensed profile than if it's super elongated. I'll just click over and show you the hold on one second. I'm lost. Okay, there we go. I'll just show you what the overnight profile looks like in 2-tick increments, right? That's just so enormous. It is such a big profile. It's hard to really realize the nuanced areas where the market might flip in reverse. So that being said, I'm going to be in 4-tick increments today. That means not just I'm looking at the profile in 4-tick, but I'm reading every other signal that way. Weak references have to be 2 whole points above or below each other, or they are weak. Poor references, cessation of the trend, all of it. It's now in 4-tick increments. Okay. As far as Bookmap is concerned this morning, we do have the bracket bots on the market maker bracket bots. So I will be focusing on the Trader Map Lite profile more than I will be focusing on the regular profile for the ES. I will keep this up from time to time, and this is the reason why right here, because I will be looking for these large nodes of liquidity that are sitting somewhere in the order book. So basically, seeing this large node at 53.25 tells me that the market doesn't want to run too far to the downside. It doesn't mean it cannot move to the downside. It just means it doesn't want to run too far to the downside. It's trying to use this as a magnet, if not to pull price to it, at least to stop price from getting too far away. Okay, it's kind of like constantly tugging on price. The further price tries to move away, it's getting pulled on like a rope. Okay? So as long as this large node here at 53.25 remains there, I think the overnight low is about as far as we would go. That we would just get a look below and fail and pull back up. But if at some point in the day this randomly disappears, whether the market is going up or down will be important information to be aware of. Because if the market is going up and that disappears, it's likely to turn around and start heading lower. And if it's going lower and that disappears, it's likely to start to get some serious speed and momentum to the downside. So I'll be clicking back from time to time to check on this node at 53.25. My guess is it'll sit there all day. My guess is it's not going to go anywhere. But if it disappears, I want to be aware. Okay. But otherwise, I'll be watching the Trader Map Lite just to kind of avoid the look of those bracket bots, which can make things a little confusing. Any questions? Hit me in the chat. Who's ready for some volatility, y'all? Ba-da-ba-ba-ba. Nap is in the house. Good morning to you. Bill is here. Imran says, what do you think about today's market crash? So as I said, I know it makes me sound like a sadist, but I love it. I think it's great because it answers two simple questions for me before the market even opens. One, we're going to have a volatile day. We're going to make large ranges today. Even if the market just goes sideways all day, it'll be a large range of sideways. Okay? And two, it'll be an emotional market. This is not going to be computers, doing their regular everyday being annoying type of market. This is going to be major market, participants with very large accounts deciding to do whatever they're going to do. They may decide to take cash and buy the market with it. They may see this as a discount. They may see this as like a one day only 50% off sale and they got to go buy up all the mattresses they can, right? They may see this as an opportunity to buy stocks, in which case we will try to fill that gap. We will try to get back to Friday's low. Or they might see it as a reason to run to cash. It might be a reason to take assets that they own and sell them now because they think this momentum to the downside is going to continue tomorrow and next week and so on and so forth. And they want to take that cash and buy at lower prices, right? So that's the ultimate question we're asking ourselves today. These bigger players that have hundreds of millions of dollars of capital that they're in charge of. Okay, and let me tell you, there's a lot of humans on planet Earth with hundreds of millions of dollars worth of capital. There's tens of thousands of them, probably hundreds of thousands of them, who all are going to wake up this morning and have to make a decision. Their emotions won't let them do nothing. Their emotions will force them to react to this. And so that creates an environment where we can expect volatility, which is great for day traders. And it is an environment where we can expect emotional moves, which as an auction process trader is just much easier to read than things that are happening purely because of the options market or the day trading bots or whatever the case may be. So for me, seeing this move to the downside is actually exciting because it means there's a real opportunity to make some money today. And I know that seems crazy. My 401k, my IRA does not like it, okay? My IRA does not like waking up this morning, but the day trader in me loves it. Frito says a little bit of a kerfuffle in the markets today, it would seem. Yeah, I'd have to agree. It's a little kerfuffly. Griff says legends will be made today. Yeah, somewhere. There's somebody that's going to change their life today. We'll see what happens. Good or bad. Jay in the house, good morning to you. Opportunity on knocking. Will is here. Good morning. Dennis P. Welcome. Nap says the VIX is over 56. Volatility, baby. There is fear in the air. There is blood in the streets. Gotta love it. Oscar, good morning to you. 200 dogs in the house. Ships is here. Hola. Nap says they're talking about limit down triggers. Yeah, I think there was a limit down trigger in some of the markets over the weekend. Some of the overseas markets. For those that don't know what that is, there are what's called a trigger. There are things that can happen where if the market makes a certain number of points to the downside in a short enough period of time, I don't know exactly what it is. The chat can tell me. They will basically shut off the market. They'll literally turn off the NASDAQ and the NYSE, and they won't let people trade stocks. I don't think that's going to happen today, but it's certainly possible. So if out of nowhere the market stops moving, you'll know why. John says the Intel CEO is quoting scripture. Oh boy. Let me guess, Revelation? That is easy says, how do you expand the width of the columns? So again, the way TPOs are designed is you choose what tick increment you want to put the TPOs in. Okay. Right now I'm in 4 tick increments. So that means each letter represents 1 point of price. If I were to make it 2 points of price, the whole thing would smush down even tighter. If I were to make it 4 points in price, it would smush down even tighter again. I don't want to go more than 1 point because I think I might start to lose information if I do that. So to me, I think, 4 tick increments, 1 point increments is a good level. We can see the areas where the market spent the most time. We can see the areas where the market brought in the most volume. Those are the areas we're going to look for support or resistance today. And we will just have to use the overnight range because the last time we were in this area was a long time ago. Excuse me. So looking at the market the last time we were trading in here between 5.8 and 6.11, these are the areas that stand out to me as potential areas for the market to flip and reverse to the downside. But that doesn't necessarily mean they will be. Okay? Because again, it's going to be very emotional today. People are going to be reacting to the most recent information they have available. So I would actually say these areas here, where you see the yellow circles, are more likely to be resistance. So it could be anything. We got to be like water, my friends. We got to be open to see where the market reverses here today. But I don't know that past trade from 3 months ago really matters as much as just the emotion of the moment. If somebody wakes up this morning and they say to their trader, listen, I need you to sell $100 million worth of such and such a stock, that trader is going to be shorting every fucking high, right? They're going to be trying every time the market pushes up, they're going to sell a little bit of it. And then it's going to come back down. It's going to start going up and they're going to sell a little bit more. And it's going to come back down. They're going to sell a little bit more, right? That is if they try to get into cash. So it could be the other way. They could be buying every dip. They could be like, hey, dude, accumulate a bunch of stock this morning. The market's on sale. Let's start buying it up. And then every time it goes down, they buy a little. And it comes up and it comes down, they buy a little. We don't know yet. So exact support and resistance levels, we'll have to just kind of wait and see. All I can tell you is that it's going to be emotional. Let's get emotional, emotional. I want to get emotional. For those of you that are just joining, we got about 2 minutes till the market opens. I'll give you my whole rundown. You could just scroll back and rewatch the first 5 minutes of the live stream, but I'll give you the whole rundown right now in less than 2 minutes. Are you ready? I think today is going to be a very emotional market. I think there's going to be a lot of panic selling and a lot of FOMO buying. I think that the market is going to have a large volatile range. I do not know if we're going to continue the momentum to the downside this morning, meaning we're going to continue to sell off all day, or if we're just going to go sideways inside the overnight range, sideways inside the range from the weekend. Okay. There is also a possibility the market completely retraces and gets back up to Friday's low. That to me is the least likely thing to happen, that we would get all the way up there, but it is the most likely thing that the market will at least try. So I do think this morning the market will try to get back up to Friday's range. There will be some buying that will try to fill this gap. I do not believe they will be able to fill the gap. I think at some point the market's going to get smacked down. Once it is confirmed in my mind that we are not going to fill the gap, okay, once I see resistance that I can trust, I believe at some point in the day we will test the overnight low down there at 51.18. Okay. Once we get there, I have no clue what comes next, and I will just have to wait and see. But I do think if we cannot fill the gap, we will come down at some point in the day to the overnight low. That does not mean we will instantly do it. We could spend 5 hours going sideways first and then poke down at the very end of the day. But I'm telling you, if they can't fill the gap, they'll test that overnight low sooner or later. Okay. As far as how I'm going to be trading this morning, I'm going to be like water, my friends. I am not falling in love with trades. If I get in a trade and it goes my direction, I'm putting my stop above my entry so I can't lose money, above a long or below a short. Okay. I am going to lock in profits quickly. I'm not going to fall in love with trades. It's going to be a very volatile market. If it's going 200 points to the downside, it's not going to do it in a straight line. It'll go down and come back up and go down and come back up and go down and come back up and go down and come back up. You can take profits and you will have chances to re-enter, whether we get momentum or not. So there's no reason to fall in love with trades. Lock in profits today, and do not feel like you have to stop trading just because you locked in some profits. It's going to be a very volatile day. There will be a lot of opportunities. Drink some coffee, my friends. Drink some coffee. All right, the market is open. Right now we have a gap and go. I still think they're going to try to fill the gap. I am looking for resistance around 51.84 and support 51.43 and 51.40. That area there. Can they fill the gap? All support and resistance levels today will be accompanied by question marks because it's going to be emotional. So it's hard to have exact levels where the market will flip. But I'll let you know once I see that the momentum has shifted. And the last thing I wanted to mention for those that are just joining is that large node we were talking about earlier. 53.25, there is a very large node of liquidity we can see in the order book, thanks to the Bookmap software. That is telling me they don't want the market to run too far to the downside. So that increases the odds in my mind. If the market gets below the overnight low, if it gets down here below, 51.17, it will probably fail and come right back up. Okay? As long as that remains there. If they disappear that, everything changes. Okay, passing back through the opening price means they are attempting to fill the gap. This is the buyer's chance. That was their dip. Can they start to create some momentum up this morning? Can they start to fill this gap? Or do they get smacked right square in the mouth? Let's see what happens. Let's get volatile, volatile. I want to get volatile. All right, so we're pushing up into 51.82. I am looking for some resistance here. So I'm watching very closely how the market moves inside this range. I'm actually going to zoom in a bit. Because resistance will tell us a tale. Are people starting to sell? Are they trying to unload stuff? Or are they going to continue to buy? In which case we do not get resistance. Let's see what happens. Dun 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 dun. Okay, for now, they're holding the opening price. That means they're going to make another push to the upside to test the resistance again. Here we go, testing that opening price again. Can they hold it? Charles, why does the opening price matter? Because the opening price tells us if they're trying to fill the gap meaning go up, or they're going to get a gap and go, meaning go down. Each time it passes through the opening price, it goes from being bullish to bearish, to bullish to bearish, to bullish to bearish. So they got to hold this open if they want to keep retracing this gap. And for now, they're holding. Okay, here's that test of 82. Does this become resistance? Boom, seller's waiting. Okay, so I'm starting to put data points in the back of my mind. The first data point is they're trying to fill the gap. They're trying to take the market higher this morning. But each push up, they're immediately getting smacked down. What does that tell me? Somebody is selling today. And they're using each one of those pushes up to get out of a little bit of their position. These guys are too big to sell all at once. Okay? So they've got to slowly unload it throughout the day. Right now, they're starting to do that, in my humble opinion. So we are looking to make a move up to the next resistance around 5,200 and see if they smack the market down there. Okay, 5,200. Do we get resistance? We now have what we call a low volume node right here at 51.86. That increases the odds that the market will come back for that level. Once it backfills it, that might become support for the next poke up. If not, half back at 51.76. Woo! I told you there'd be volatility, y'all. I told you. So there's the backfill, that low volume node. Do we get a bounce here? If not, we're looking for support at 76. Okay, we did get that bounce. So we're heading up to the next resistance, 52.16. Guys, I said volatility. I said it, right? I said emotion. I did say that, right? Okay, so we're back at 51.76, looking for a bounce here to head back up for the highs. All right, market internals reading a lot of panic. They are selling every rip. Can they hold the halfback? Right here at 51.76. Can they hold it? Oops, they did it again. They shorted the high, unloaded on them. Ooh, baby, baby, someone's selling their stocks. Slowly but surely in a gap fill. Okay, I'm going to stop. I'll stop now. So again, here's what I'm reading with my read of the market. They are using this gap fill to slowly unload a position, right? The momentum of trying to get back to Friday's low, they're using each little push up to unload some stocks, unload some stocks, unload some stocks. So for now, it is still a gap fill. We're still looking to test 52.16 and then 52.30 after that. But I don't think it's going to go up all day, folks. So I'll be continuing to monitor the halfback, which will change with price as a level to watch for a change in market sentiment. As long as that halfback continues to hold, they're trying to fill the gap. They're going to take another poke to the upside. But if it fails, look out below. Let's see what happens. Okay, pushing into resistance here. Now watching that half back to see if they can hold it as support. If they can, heading up to 52.30. Okay, if I was long from the opening price, from the pass back through the opening price, so let's say, for example, I saw the market open, I saw it push down, I saw it come back up through that opening price, and I thought we're going to try to fill the gap, I would be, and this is just my opinion, okay? Just don't take this as financial advice. I would be looking to take profits in this resistance, okay? We're at half a gap fill. We're at the half back from the overnight. We're at previous resistance from the last time that the market was trading in this range. There's a lot of resistance between basically 25.30 and 52.30 and 52.40. Okay? So if the market is going to run out of steam and turn around and come back down through the opening price, this is a great area for it to do that. So if I was looking for somewhere to start locking in profits on a gap fill trade, this might not be a bad place, because even if the market doesn't end up reversing, there will at least be a pullback where you could re-enter. So food for thought. Danny says, thank you, all out now. No, Danny, no. Not because of me. Because of your own TA. Your own understanding of markets. All right, I do think this market has one more bounce in it. As I said, they're using these moves to the upside to unload stocks, to sell their stocks. So I am looking for support once again at 51.85 and another move up into resistance around 52.30. Because I think they want at least one more poke to the upside. If this support around halfback, around 51.85, cannot hold, well, then we start to get a pullback, okay? But for now, I think the momentum is still to the upside for at least one more poke at the highs. I mean, it might be more than one, but at least one. Jason says, I've never had my calls lose value as the market goes up in the money only options today. Yeah, I don't understand the Greeks well enough to understand that, but that is bizarre. I guess it depends when you bought it, what your strike price is, and when you actually entered. Nor says Q. I have a feeling the Q is doing the same exact thing as the ES. Probably a gap fill attempt. Yes, sir. And they're right in a resistance zone here. So if the Q can stay above its halfback, which is 17,730 right now, the next target to the upside is 18,016. If it breaks 17,730, it might be heading back down through its opening price because they are in a pretty strong node of resistance right now. So can they get one more push to the upside? Let's find out. We got some numbers coming out here in 2 minutes. I would normally say, well, look out for some volatility there, but I don't think that matters today. Jim Dalton talks about what's called a ruling reason for a market. So like bigger picture, why is the market doing whatever it's doing? This morning, the only ruling reason for anything the market does today is a reaction to what it did over the weekend. People are going to wake up this morning and they're either buying or they're selling. You know what I mean? They're either taking the cash they have and putting it to work in the market. I'm talking about the big players. They're either taking the cash they have and putting it to work in the market because they see this as a once a year opportunity to buy a dip, or they're panicking and they're selling their stocks to get more cash because they think the market's going to keep on dipping in the days and weeks ahead. It's only one of those two things happening today. So we'll look out for a little bit of volatility here in about a minute. But honestly, I don't think it's going to make any difference bigger picture. Although we are seeing Bookmap go dark. So yeah, we're going to get that volatility. But I don't think the numbers really matter. Okay, back in this resistance. So as I said, to me, this is a great place if I wanted to sell stocks in a panic mode to start unloading here. So once the volatility from the numbers cools off, what happens next? Okay, so that move right there, basically that we just got from around 52.20 up to 52.55, that was just short covering. That was just a motion. Sometimes a market has to rally before it can break. Sometimes you need that final squeeze to take out all the weak hand sellers before the market reverses. So from here, what happens next will give us a huge insight to carry forward. Can we bring in new buyers up here at the highs? In which case we keep moving on the gap fill, or do we fail and start to pull back down? The level I am interested in is right here at 52.25 because that is a low volume node. That is less than 100 contracts. So that tells me there's a high probability the market's going to come back to it, and it might turn that into support. So if the buyers want to keep the momentum going, they should start buying there. Let's see what happens. Okay, there's the backfill of that low volume node. Do they start to buy here for a bounce, which would be bullish? Or do we need to pull back down to the halfback at 5,200 to look for buyers there? Look at those ticks, y'all. Boy, they are selling their stocks. Okay, so this is the moment of truth for me in terms of the momentum to the upside. We've got this area right here around the halfback between 51.95 and 52.10. Okay, this area was acting as resistance on the way up. So the question is, does it now become support? Can they turn this into support and hold the market above here? As long as they do, they're looking for another poke to the upside, right? We talked about this first thing this morning. The way they sell, they don't instantly sell the minute the market opens. They let it go up and they sell a little. And they let it go up and they sell a little. And they let it go up and they sell a little. We don't know how far up they're going to let it go until they're like, yep, we've sold all we want to sell. And then the market tanks lower. To me, this area around halfback will tell that tale. If it holds a support, they're looking for that next poke to the upside. If it fails, then we're going to start to gain some momentum to the downside. So I'm keeping a very close eye between 52.10 and 51.95. Can they hold it? And unfortunately, I got to switch to the private stream. It's going to have to be me and the cool kids in the Piratetraders brigade that find out if they can hold it or not together. So if you're not a member of the brigade, think about how many times you could have made $10 today. How many more you might make. It's probably worth joining the brigade. If you look at the top of the screen, you'll see there is an address, piratetraders.io/join. It costs $10 a month, and you can hang out with me every single day. If that's too much money for you, if $10 is too big a commitment and you just can't bear it, I look forward to seeing you here next Monday. As far as my advice as to what to expect today, I'm going to give you two separate ideas at the same time. First idea, right now, intraday, the momentum is up. They are trying to fill the gap. Okay? So as long as they can hold the support, they can keep going up. But I believe that they are selling stocks because they want to get down to that overnight low at some point today. So whenever the momentum runs out, whenever the support stops holding, look for a pullback through the open. Okay? And unless they get to Friday's high, which they could, I'm not saying they can't, unless they get to 53.32, I would expect the selling to continue into tomorrow. Okay? So best of luck, traders. Enjoy the volatility. It's a beautiful thing. And we'll see you next week. Members of the brigade, give me about 5 minutes and I will see you in the live stream. Can they hold 51.95? As long as they do, I'm looking for another move to the upside. Thank you and goodbye. Au revoir.